The short answer, no. Truly free skip tracing doesn't exist in real estate. Every platform you'll find runs a freemium or trial model with strict limits on accuracy and volume. You might get 10 free traces or one address lookup, but scaling to 50 or 100 property owners requires payment. That's not a scam. It's how data systems work. Collecting, verifying, and maintaining contact databases costs money. Free tools absorb that cost by restricting your searches, throttling results, or selling your data to other platforms. The real question isn't whether free exists, it's whether the paid option pays for itself. And the data says it does. Investors using skip tracing close 2 to 5% of contacted owners versus less than 0.5% from cold calling. That 4 to 10-fold lift covers the cost of the tool inside 1 or 2 deals. Skip tracing is the process of finding current contact information, phone numbers, emails, mailing addresses for property owners when public records are outdated or incomplete. Most real estate investors pull property data from the tax assessor, deed records, or MLS. That data is often 6 months to 2 years old. The owner has moved, the phone number is disconnected, the email bounces. Skip tracing fills that gap by cross-referencing multiple databases, utility records, credit reports, social media, warranty registrations, and other sources to surface a current phone number or address. The problem: not all skip tracing platforms are equal. BatchSkipTracing reports a 76% right-party contact rate, meaning 3 out of 4 traces connect you to the actual decision maker. But the industry baseline sits around 25%. That's a massive gap. Paid platforms spend more on data verification, consent compliance, and algorithm refinement. Free tools often use older data, lower quality sources, or both. The cost per lead ranges from 2 to 15 cents on paid platforms, and those platforms deliver 76 to 90% accuracy rates, plus built-in compliance workflows. That's the real value, not just the trace, but the certainty that the contact is correct and legally callable under TCPA rules. Here's how modern skip tracing actually works under the hood. A platform like Goliath Data ingests property records, address, owner name, last known phone. Then it cross-references dozens of data sources in real time: utility files, mortgage records, credit headers, social media profiles, and compiled consumer databases. Each source votes on whether this phone or email belongs to the current owner. The algorithm weighs each source by recency, reliability, and exclusivity. A utility record from last month outweighs a credit header from 3 years ago. A phone that appears in 5 independent sources scores higher than one that appears in 1. The result is a contact record with a confidence score and a consent flag. That consent flag is critical because the FTC changed the rules on January 27, 2026. One blanket form no longer covers a list of partner sellers. You need one-to-one consent for each contact method on each property. Paid platforms like Tracerfy, BatchSkipTracing, and Goliath Data handle that compliance automatically. They track which sellers agreed to which contact methods, and they sync that to your dialer or CRM. Freemium tools skip this step. They'll give you a phone number, but you're responsible for proving consent. That's where the legal risk lives. Skipify.ai delivers a 97% hit rate by running advanced machine learning on patterns across millions of historical traces. But again, that accuracy is built on paid infrastructure. Free tools can't afford to build that. Here's the 5-step process to pick the right skip tracing platform for your situation. Step 1. Define your monthly volume. How many property owners do you need to contact per month? If it's fewer than 50, a freemium tool like Resimply's 30-day free trial might cover you while you test your pipeline. If you're contacting over 50 per month, move to a paid platform. The math is simple. Even at 10 cents per lead, 50 traces costs $5. A single deal pays for a year of traces. Step 2. Test accuracy on a small sample. Don't buy 1,000 leads blind. Pick a paid platform. Tracerfy at 2 cents per lead or BatchSkipTracing at 7 cents per match, and trace 50 properties you already have contact info for. Compare the results. Did the tool find the right person? Did it surface a current phone number? This is your baseline. Step 3. Check consent compliance. Ask your vendor, do you track consent per property and per contact method? Does your API sync to my CRM? Can you show me your TCPA audit trail? If the answer to any is no, move on. Non-compliance isn't a cost, it's a lawsuit. Step 4. integrate into your workflow. Paid platforms like Tracerfy and BatchSkipTracing integrate with major CRMs, Pipedrive, HubSpot, Salesforce. Make sure your tool connects to yours. Otherwise, you're copying and pasting data like it's 2005. Step 5. Calculate your cost per usable lead, not per trace. If you trace 100 properties and reach 45 actual decision makers, your cost per usable lead is total spend divided by 45. That's what matters. Free tools might cost nothing per trace, but if they only hit 25% accuracy, you're paying 40 cents per usable lead. Paid tools at 15 cents per trace, but 80% accuracy cost 19 per usable lead. The math favors accuracy. Let's walk through what this looks like in practice. An investor in Texas was pulling 50 to 70 probate and pre-foreclosure leads per month from county records. He had names and last known addresses, but phone numbers were rare. He was calling the properties, leaving messages, and getting callbacks on about 8% of outbound calls. His conversion rate to deal was 0.5%, roughly 1 deal per 200 calls. That meant 170 calls to land a single probate lead he could work. He switched to BatchSkipTracing at 7 cents per match. He uploaded his 50 leads, paid about $3.50, and received current phone numbers on 38 of the 50 properties. Now he had a 76% hit rate, well above his expectations based on prior cold calling results. He called the 38 numbers. 32 picked up or called him back within 48 hours. 32 divided by 50 is 64% right party contact rate. His conversion jumped to 2.8% from deal phase leads because he was now talking to actual owners, not strangers. In 6 months, he closed 3 deals sourced from the same lead volume that had produced 0 closes using outdated phone numbers. The skip tracing cost per close about $11. One deal covered 6 months of monthly skip tracing expenses. He then switched to Goliath Data's platform to track consent across his growing seller list, ensuring TCPA compliance as his volume scaled to over 200 traces monthly. The lesson: accuracy compounds. A higher hit rate means fewer wasted calls, fewer legal risks, and more deals from the same prospect list. Mistake 1. Chasing the cheapest per record price. You see a tool advertising 1 cent per trace and sign up immediately. Then you realize the data is 2 years old, the phone numbers route to call centers, and your dialer can't reach anyone. You've wasted time and built nothing. The cost per record is not the cost per deal. Pay for accuracy. Batch skip tracing at 7 cents with a 76% hit rate beats a 1 cent tool with 15% accuracy every time. Mistake 2. Ignoring consent compliance. You buy a list of phone numbers, load them into your dialer, and start calling. 3 months later, you receive a TCPA complaint. The FTC rules changed in January 2026. One form no longer covers a list of sellers. You need explicit consent for each property contact. Make sure your tool tracks consent and syncs it to your CRM. If it doesn't, you're personally liable, not the platform. Mistake 3. Using free tools for volume campaigns. A free trial might give you 5 or 10 traces. That's fine for testing, but if you're running a business that contacts 50+ owners monthly, free tools become a compliance nightmare. You can't track consent, you can't scale, and you're liable for every dial. Pay the 2 cents to 15 cents per lead. It's non-negotiable at scale. Mistake 4. Not validating accuracy on a sample before going all in. You buy 1,000 leads sight unseen and discover 80% are bad. You've wasted $300 and lost 6 days. Test 50 first. Validate the hit rate, then scale. Here's the rule to remember. Skip tracing pays for itself if you use accurate data and stay compliant. Cheap data and legal risk destroy your ROI faster than you can close deals. Subscribe for more real estate technology breakdowns.